Okay, I see we are live. I'm just muting a couple of things here. Welcome to this special Election Day edition of Old Bull TV Live. I'm Flip Pidot, your host and founder of American Civics Exchange. Today, I'm joined by Dr. Harry Crane from Rutgers University, acclaimed statistics professor. He's been on the show with us before. In fact, I was thinking back, I think he may have been actually one of our first guests on one of our first full episodes here on the channel. And of course, he was a participant in the political prediction conference we ran back in the spring. We're delighted to have him back with us again today to break down some of these numbers that are emerging here as we're getting ready for the first poll closings a little bit later this evening. Harry, thanks for joining us. How are you doing?
Good. How you doing? Thanks for having me.
Yeah, well, we're very eager to have you back. You know, one of the really interesting things that those of us that are involved with these political prediction markets and looking at the different political forecasts have kind of been marveling at and trying to get our arms around. One of the key things we want to talk about here today is this incredible disparity between the prediction market pricing in terms of Trump's odds of re-election tonight, as well as other sort of red versus blue divides. You know, will the Republicans hold control of the Senate and other key battleground races? And then the traditional data journalists and election forecasters and pollsters, which are really have been showing Trump increasingly with a near zero chance of success. Whereas the prediction markets have consistently shown Trump with something more like a 35, 40, even above 40% chance of success, which is really different from what we saw in 2016 and 2018, where they're all roughly aligned. Of course, no one really saw the Trump upset coming in 2016, but predicted traders were sort of more bullish on Trump than most of the other forecasters, with the exception perhaps of Nate Silver at 538. And this year, of course, 538 is more bullish than some of the others that have him have Trump at 4 or 5%, and Nate has him, I think, at 9 or 10%. But it's been an interesting divergence, is sort of the moral of the story here, and something I'm eager to drill down into with you today. So, but before we get into that and some of the nitty gritty on how these races are emerging and the prices are evolving today, can you give the viewers that aren't familiar with your work a little bit of background on the work that you've done generally in statistics and modeling and analysis of these prediction markets, and sort of trying to get a quantitative sense of how well they do at forecasting political uncertainty vis-a-vis these kind of more traditional forecasting methods?
Yeah. So on the prediction market front, so my background in probability and statistics is not specific to elections. Actually, I don't model elections or anything like that. But what I do and what I've been involved in a lot is in different forms of risk or gambling types of problems, but also practical and theoretical. And that's where the prediction market kind of really interests me for elections and for other things. So what I've been doing over the past couple election cycles is I've actually been curious, and one of the things that actually really got me interested in some theoretical problems in probability is actually trying to understand, what do these forecasts mean on 538 or The Economist? They put out a number, a percentage. It's a one-off event. A lot of people think about, well, if you say something's 10%, it means it'll happen 10% of the time in a large, if you do it over and over and over again. But here we're talking about a one-off event. It's an election. It'll never happen again. So how are we supposed to make sense of these numbers in that case? So actually, I thought quite a bit about that, and I think it's an interesting question. But what I set out to do is just to see, well, you have on the one hand these forecasts, which are using polling data primarily, and other kind of demographic data. It's not exactly clear what they're doing, but they're using statistical models somehow. And they come up with these forecasts, these percentages on 538, Economist, New York Times. And then you have the prediction markets, where it's pretty clear what is actually happening. It's not clear how the markets come to the number, but what's actually happening, of course, is people are offering to buy and sell contracts at a particular price, and that kind of settles down to a stable value, which represents at least the market's consensus on what the chances of each candidate winning is. And so what I set out to do was to just try to understand, well, who does this better? Are the modelers better than the markets? Are the markets better than the modelers? So I started this in 2018. I'm doing this again for this year. The work's available. I posted it already. This is on Researchers One, and I also have an app where you can look and see, who's doing good to date, who's doing better than who to date, because it's a sequential trading mechanism. What would 538 changes its forecast every day, and the markets change every day. So if they were doing trading kind of over time, over the past couple of months, how would they be doing? And now ultimately it'll all be decided by what the outcome is. And we do this also for House and Senate as well.
Yes, that's interesting. Talk a little bit more about that, because I saw this app that you put out a few weeks ago, and this basically, if I understand it correctly, and tell me if I don't, basically simulates a hypothetical portfolio traded on Predictit, just going by the odds thrown off by 538's forecast, and as you said, on House and Senate races and on presidential. So I gather you're able to kind of collect a score along the way, even before these uncertainties resolve, even before we see who wins the races, by simply seeing, okay, if 538 was effectively front running, their moves were ahead of Predictit's, they'd be able to buy that, that discrepancy, to sort of buy the undervalued and sell the overvalued positions. And then if Predictit sort of caught up with it, then this simulation would show the simulated 538 portfolio generating positive returns. Is that basically how it works?
Yeah, exactly. I mean, so I'm sure a lot of people listening already know this, but for those who don't, I mean, the basic premise is 538 puts a number out, which is right now. So we don't actually, I'm not actually analyzing the general, just will Trump win or Biden win. We do the state by state. But let's just take the who will win outright as the example. 538 has Biden at, say, 89%. The market has Biden at 67 cents right now. And so according to 538's own analysis, 67 cents is cheap. So they would buy some number of contracts of Biden, and the number of contracts depends on the particular strategy. So you have it up now, and we're considering two strategies. One is using the Kelly criterion, which is going to buy more shares when the perceived edge is higher, and it'll buy less shares when it's lower. And then this dollar cost averaging is just, if we perceive there to be an edge, every single day we look and we see, is our probability higher than the price? If it is, we buy $10 worth of shares, and otherwise we don't buy anything. And then, of course, the opposite is true also. If I own a bunch of shares of Biden, and then, like you said, if the market catches up to me, now it doesn't represent any value to me, so I sell it, but I've locked in that profit because I actually bought low. So if exactly as you said, the 538 was processing information more efficiently, and they were one day ahead of the prediction markets, then they're basically going to be making risk-free profit, because they're going to be buying one day ahead of time, and then they can sell it the next day. Now, the results that you're seeing right here are the results of the presidential over the past, say, several months. That's not okay. Over the past several months, and as of now, it says for the presidential race that 538 is 1.8% ahead. So that's the value of the portfolio. So even if there was no selling that happened, right, the value of the portfolio could go up or down, and this is saying that it's up 1.8%.
Sure. So that's on presidential. I'll click down here to pull up House just for comparison. It looks like
so this is, yeah. Well, this is going back only till early October. We're working on getting the data. It turns out actually 538 didn't post their forecast of the House until early October, so we didn't get to add this till later, but we now have to collect the data going back a bit. But yeah, this isn't showing as much time, but it shows it's roughly even. I mean, what we've been finding so far, there hasn't been anything exciting happening, basically, in the sense that the market has been about, so on the presidential race, the market has been about 20 cents or 25 cents separated from 538. And they kind of have been moving more or less in tandem, with the exception of the past couple of days, where if you go to, can you refresh the page? Actually, I thought it should actually be, yeah, actually. So if you look at the past couple of days, or the past couple of weeks, or past week or so, there was a dip there. And you can see that this is a result of certain of the swing states or the battleground states, Pennsylvania in particular. If you take a look instead of the all, if you go to all up in the top, if you go to Pennsylvania, you'll see, for example, what's been going on just on the contracts for Pennsylvania. And there was a big,
Oh yeah, that's interesting. Look at that.
and that represents the movement of the market away from. So basically what happened since, I guess, more or less the last debate is that the market for Pennsylvania has been gradually kind of moving towards Trump, still saying that Biden's more likely to win, but it's been moving closer to 50 cents. It's actually been hovering around the 60 cent mark, whereas the 538 forecast has pretty much stayed the same. So the value of that portfolio has decreased, but ultimately, like I said, it's going to depend on what happens in order whether or not that's a win or a loss.
Sure. Yeah. You've got these kind of smaller moves along the way as the prices adjust, but obviously we're going to get big swings in these ROIs after tonight and perhaps in the coming days. Just to round it out, I'm pulling up the Senate one here too. So it looks like it's also not fully complete data, but it looks like it's pretty, hovering and wavering pretty close to that flat line. So again, we'll kind of wait to see what happens. Of course, after tonight's main event. I'm going to jump back over to the predicted map and sort of the main event here on the Electoral College. And you can see this one has shifted a bit in favor of Biden today, still showing significantly higher odds for Trump, though, than any of the pollsters or forecasters. So getting back to, again, this sort of fundamental divergence that we really haven't seen before. People float a lot of different theories on the message boards and on Twitter. Do you have kind of an overarching thesis about why? I mean, this isn't just noise. This has obviously been consistent and significant, this disparity. You don't just see it on predicted either. You see it on all of the UK-based and other European betting markets and bookmakers, where they're showing maybe not as high as 40, but often 30, 35, and in some cases close to 40%. Odds for Trump. Is this telling you something about either trader psychology, bettor psychology, biases, whether political or otherwise, that explain some of this and explain it in a way that makes sense why we would see it in this cycle but not in the last two cycles?
Yeah, I mean, so I think it's telling us, it's saying something, but I guess the exact question is, what is it? Which side does it come down on? And that's actually what I've been trying to kind of wrap my head around over the past week or so, or 2 weeks, trying to ask those who are maybe more kind of in the weeds on these markets, who are. I'm sorry. Okay.
Sorry, I'm clicking around the screen there.
The ones who are actually trading these markets very actively. I mean, I do trade in these markets. I'm by no means a professional trader. I don't have my own model. I've said that before. I use information that I have, and I have a relatively small amount of money on this election. A few $1,000s, not much, but the ones who are really in this are the ones that I want to hear from, because they know a lot better than me what the kind of the ins and outs of these numbers. And there's theories on the one side which say that the markets are just really conservative. They're heavy with conservative or Republican voters, and that there's just a skew towards Republican or conservative candidates. And they do cite maybe some evidence of that going back to some of the European elections or things that have happened over the past several years, where conservative candidates tended to get more of a vote, more betting interest than maybe they think they deserved, at least in hindsight.
Right.
But on the other hand, I mean, I guess there's the theory that they're pricing in some kind of information that just isn't in the polls. I mean, that would be my starting point, which is that the polls only account for so much information. The polls are one data point, and there's a whole lot of other information that goes into figuring out what's likely to happen. And that's exactly what these markets are designed to do, to aggregate that kind of hard to quantify information. And so that would be my starting point, is that's kind of going back to my experience, which isn't so much in political markets, but in other types of betting markets. usually if I build a model for, a sports, for sports betting and some, NFL or, basketball or whatever it is, if I come up with a model that says 90% for Biden, and then I go to the sports book and it's showing me, in this case, it would show Trump plus 150. Then I'm assuming that the bookmaker has information that I haven't incorporated into my model, and
Mhm.
that's just the normal way to approach the problem, right? You don't just assume, well, my model's right and this price is automatically wrong. And so I think that that's kind of the dividing line. Which side is it? My sense is that it's more plausible that there's information in the market that isn't reflected in the polls. And that's not just because Predicted says so, because there's a lot of inefficiencies and a lot of reasons that Predicted could be wrong. And we can maybe talk about some of those. But as you said, that we're seeing that the betting markets across the board are pretty much,
Yeah.
at the same number. So,
Right.
and I looked today on Betfair, and you can look, and this is in Europe, I believe. The amount of money, the volume that was being offered, bid and ask, was certainly in the hundreds of thousands, actually close to millions of dollars at that time. So it's not an issue of liquidity, at least as far as I can tell, in that market.
Yeah.
So
Yeah. I mean, that's sort of the angle I come at it from as well. I mean, being a believer in markets generally, and, of some, version of efficient market hypothesis. Now, obviously, and as you alluded to, the predicted markets are not perfectly efficient, for a number of reasons, not least of which being that famous $850 position limit on all the contracts. So there's only a certain extent to which the smart money can drown out the signal of the less smart money. But again, on the UK exchanges, they don't have such limits. So, it's not only due to that $850 limit. It's not an illiquidity problem. The larger predicted markets are in the nine figures, hundreds of millions of dollars in shares that they're trading. Similarly with the UK markets, some of them are doing, several million today alone, individual markets. So it's not just liquidity. It's not just structural, even though that can distort the price. And there may be sort of an ongoing long shot bias that could push things closer to 50-50 than they belong. It's plausible that there's an overarching conservative bias and that ideology bleeds into the prices. But again, it's such a distinct disparity, and the markets are so large and so liquid that it doesn't seem like a satisfying answer that explains all of it. So if it doesn't, then I think what you're left with, again, if you have some credibility in sort of the market mechanism generally, is that, as you put it, that the markets are seeing something that the perhaps less malleable, more brittle, more rigid, sometimes very opaque modelers are using to generate these probabilistic forecasts. Because, of course, the markets have those probabilistic forecasts, the professional forecasts output, as an input to their trading. Of course, in turn, the modelers could also look to the market pricing, not to say they do, but because the markets are able to, on the fly, in real time, in such a granular way across so many different markets, incorporate all that different information. And whereas the professional forecasters we know are very heavily poll driven, it's not to say the polls necessarily have to have a systematic error, a sampling error, a weighting error, for it to still be plausible that there could be more information that the modelers simply aren't able to capture in their models the way they're built. I think it was GL8 Morris at The Economist that was saying, his model isn't really meant to necessarily forecast who's going to win the election or with how many electoral votes or what the popular vote share will be. It's a way to kind of distill and aggregate the polling data to give you a probabilistic forecast based on that polling with certain error terms built around it. But none of that would capture anything to do with, is there going to be a totally unmodeled and totally out of sample effect from the pandemic, which obviously affects so many other things in such gargantuan ways that, could it be that the turnout rates that we're expecting on absentee balloting or the response rates, I should say, or the turnout rates of early voting or, election day in-person voting are several percentage points different from what historical precedent would suggest. And that seems like one of potentially many, but certainly a significant one, category of hard to model, if not impossible to model, risk to any, otherwise relatively robust polling driven or polling plus fundamentals driven election model. So to me, that seems to, it's not necessarily the answer, but it seems to me to be the most plausible source of just, deviation away from any super confident prediction. In other words, it's hard to say in a year like this, in a cycle like this, that you're 90, 95, 96% sure of virtually anything, maybe other than, Biden's going to win California, Biden's going to win New York, things like this. But to say that, because, 5-point lead in whatever swing state 95% of the time meant this person's going to win, that this person has a 95% chance of winning. I think there are just so many factors that could buffet that hugely beyond those normal bounds, those normal error rates, that may be the market's way of saying, okay, yeah, in a normal year, sure, that tells you 90-10, 80-20, but kind of the game board's just completely flipped up to some degree. So it doesn't necessarily snap it to 50-50 or reverse the odds, but maybe it has a sort of diluting effect on these increasingly confident predictions that aren't able to take any of that into effect. I don't know if that makes sense. I'm not a statistician. You are. If that sort of sounds sensible in terms of, could it be part of an explanation of how the market could be pricing things rationally in light of this, very monolithic choir of professional forecasters telling us the opposite is true. Not the opposite, but a much, much stronger prediction. Because again, I should say that Predict It and the other betting markets are, in a binary sense, saying the same thing. Everyone's looking for a Biden win. They're saying that's the most likely outcome. It's just that they're saying, a 5-10% chance of that happening versus a 35 or 40% chance of happening is a qualitatively hugely different kind of a forecast of what's likely to happen. And it could, throw off a very different practical result too, right? A 350 to 400 electoral vote victory for Biden and 54 seats in the Senate would be very different from a 280, 290, even 300 electoral vote win and say, a 50-50 split or even 51 seats in the Senate. So I don't know if there's a better broad-based explanation out there that if you sort of go by the thesis that the markets are seeing something and pricing something rationally, even if there's distortions, even if there's biases, that there's something else that has to explain it in a rational sense, at least directionally moving it that way. That's sort of the best I've been able to come up with. Had a lot of these same conversations with other folks, and it sort of seems the most plausible to me. But I guess we see at the end of the night if that was an appropriate added measure of uncertainty, or whether the forecasters were right. No, they're going to get every state right, and their electoral vote and popular vote margins are going to be spot on. One way or another, I think there's a bit of a reckoning for one side or the other here tomorrow. So someone's going to have egg on their face. Maybe everyone, but most likely the lion's share is going to be. Someone's going to get more credit and someone's going to get more blame tomorrow, and probably have a little bit of a revisiting in terms of what it means to, do we need to rethink polling methodology? Do we need to rethink the black box model or methodology, or do we need to rethink what the real information value is here of these, retail focused real money political prediction markets?
I think there's some of that, but I think that I think there's two things, first of all, to explain. To me, first of all, is if you have a model, first the thing that that's I think common sense is, if I were to have a model for any event and then there was a market for that same event, then the truth generally probably lies, assuming that there's actually information in my model, generally would probably lie somewhere in between. So you would be shrinking towards the market to some degree anyway. Whether it's you shrink halfway, 25%, 75%. I mean, those are things that you get into when you're in the practice of betting and buying and selling. So I'm inclined to think that may be possible here. But the other thing is that it is possible. It is very possible, and markets sometimes are wrong, in some and can be very far off. And it doesn't happen maybe very often, but there are certainly cases where you can see sporting events that just were completely mispriced. I think Mayweather McGregor being one of them, that the chance of Mayweather winning were extremely high. but that the odds on him were not nearly as high as they should have, as he wasn't nearly as much of a betting favorite as maybe he should have been. So it is possible that the market could be off due to biases that you mentioned. But I think that there's a very clear explanation for why the market could possibly be pricing in information that's not in the polls. And the one is you consider the first is actually a systematic polling error, which would be in the favor, well, the polling error would be in the favor of Biden, which would make the election result favor Trump in the sense that Biden is the polls are too optimistic for Biden. That's one thing that would explain why the markets are doing what they're doing. Are they right about pricing in that polling error? That's another question, but it's certainly a reasonable possibility based on everything that happened in 2016, where there appeared to be some kind of polling error. Was it just one of those things that happens once? Are the markets over adjusting? That's possible. The other thing is just even without any kind of shift in where you expect the kind of the average outcome to be. If you were to add a bunch of uncertainty, and the uncertainty due to the pandemic, uncertainty due to early voting, the voter turnouts through the roof because of the mail-in voting, all of that would push the correct price closer to 50%, or closer to 50 cents, I should say. So those are two, I think, very plausible ways that the market could be pricing in information that's not in the polls, because, at least by my understanding of what 538 and the economists do, is that they are not assuming any kind of systematic polling error. They're assuming the errors in the polls are statistical errors, which is the usual plus or minus margin of error, but they're not assuming that number is biased in one direction or the other. And maybe they shouldn't, but there's certainly a possibility that they are. And that's certainly what one side is suggesting over the other.
So that's interesting. Can you, for general consumers of polls, talk about that a little more in terms of what obviously we always hear about the margin of error in the polls, and describe, give us a better sense of what that distinction means, sort of the statistical error, I guess, sort of the sampling error versus some kind of other non-statistical, maybe not non-statistical is the right way to put it, but some kind of other systematic polling error. Like, for instance, in 2016, we did see a systematic polling error, or most pronounced, I guess, in sort of the upper Midwest and Rust Belt, of a few points towards Trump that simply wasn't captured. So is that the kind of non-statistical or otherwise derived polling error that the modelers simply don't even attempt to capture or account for in the risk around their forecast?
Well, I think they try to account for it by not having it not happen, and one of the ways that they do that, as I understand it, I'm by no means an expert in polling, and actually it's pretty complicated when you start to get into it. And the reason, and it's very understandable how they could have gotten it wrong in 2016 for the reasons that they claim, which is that there's demographic reweighting that goes on in these polls. So if you were to run a poll, you run a poll of 1,000 people, but it was 75% male and 25% female, then you need to reweight that to represent that the women that's not representative of what the voter turnout's going to be, and so you don't want to skew your polling results. As I understand it, in 2016, what they claimed is that they didn't have a proper weighting on non-college educated and possibly white non-college educated in some of these states, Michigan in particular, probably Wisconsin, maybe Pennsylvania. So given that they were underrepresented in the polls and that they were overwhelmingly in favor, voted for Trump seemingly, that would explain the discrepancy there. But as far as just ordinary statistical error is concerned, you can imagine if you're taking 1,000 people, and let's just say for the sake of it that it's 50-50 between two candidates, then you can imagine flipping a coin 50 or 1,000 times, and it's going to come up heads some number of times and tails some number of times. And the average case would be that it's 500 and 500, but just by pure, sampling error or randomness, you're going to get maybe 510 to 490, right? Or something like, or, anywhere in some range of possibilities, it'll be clustered around that 500, that 50-50 number. And so there's just the sampling error, the margin of error of a poll is explained by just statistical theory, and just explained by this appeal to the fact that we know when we take 1,000 events, each being 50-50, it doesn't come out even every time, just due to what's called sampling error, ordinary statistical error. The issue of systematic bias, like I mentioned before, is different, because it would be like you're observing these 1,000 people, and 500 of them are for Trump and 500 of them are for Biden, but that for some reason you missed some percentage of them, and it was more biased towards missing Trump voters than Biden voters, or missing Biden voters than Trump voters. And that's a theory that's been thrown out there, this so-called silent Trump theory of Trump voters just being less likely to respond to pollsters, or Trump voters being less likely to tell anybody who they're voting for. It's been dismissed by a lot of people, Nate Silver being one, but a lot of the pollsters don't seem to acknowledge the existence of it. One does, and tries to account for it in their polls. But this is another reason why they try to explain another explanation for why the polls were off. And as far as I can understand, that type of thing has not been accounted for in the polls this year, because the polls don't necessarily recognize that it exists, except for one of the polling groups. Trafalgar is trying to account for this in their polls. So I think that's another uncertainty. Is that real or is that not real? It's something I've been trying to get a handle on myself in asking people, and it depends who you ask whether they think it's a real phenomenon or not.
Sure.
Yeah.
So let's pretend tomorrow we wake up and we find that Trump has won a narrow victory, or a week from now, 2 weeks from now, whenever we know. What is your guess as to what would be the most likely explanation? Would it be some kind of systematic polling error, whether failing to find shy Trump voters, or some, migrating from landlines to mobiles to online polling, whatever it might be, some large and widespread polling error, or pandemic driven, errors, maybe the wrong term, but a pandemic driven differential in ballot return rates and in-person turnout, or a combination of the two?
Well, it could be that. I mean, that's the big unknown here, and that's why I mean, I don't know how pandemic would affect, in the absence of all the other things we already mentioned as to why polls can sometimes be skewed in one direction or another. I don't know why pandemic would necessarily cause additional difficulties for pollsters, but that's because this is an unprecedented situation to some extent, especially for polling an election, right? Mm-hmm. So it very well could affect polling in one direction or another, but I don't have a good explanation for why it would. But I think that what would be the best explanation for it, to me, it would be clear that there was a systematic bias or systematic polling error. I mean, that to me is this most straightforward explanation. That's the simplest explanation. The simplest explanation is not, as I think Silver or Gelman or the economist has explained, that the most likely, or suggesting that the most likely explanation for why their model could be wrong is that the election is stolen, I think is an absurd suggestion. That certainly is a reason why their model could be wrong, but to suggest that that's the most likely reason, when there's plenty of other explanations for it, mm-hmm. the virus causing extra, polling uncertainty, or just there being systematic polling bias, as we've seen in the past, to me would be the best explanations. And if there were such explanation, and also the fact that the markets are to some extent kind of shaded in that direction, which is towards the 50-50 mark, suggests that this is not at all an unforeseeable circumstance. then the question becomes, though, why are the markets shaded? I mean, that's the question. Are they shaded 30 points or 25, 30 points because they think that there's some huge fraud that's brewing, or are they shaded for more, I would say, more plausible reasons?
Right.
That's something we'll never know.
I want to take a quick minute to let viewers know, if you're watching us on the YouTube channel, if you do have a question for Harry or for me, but Harry can probably answer more interesting questions than I can, go ahead and submit it in the chat box or in the comment box below the video. We have gotten one here. We've gotten a couple here, but the first one that came in is viewer wondering how you would construct the most effective presidential poll. Big question, I know, but perhaps break it down however he seems best. So we've covered this a little bit, and you've given the caveat that you're not a pollster, but do you have a sense of sort of either, whose polling methodology you like best, or if you were tasked to do so yourself, how you might go about, a more proper weighting or trying to weed out whatever systematic polling error you think might be out there?
Honestly, I don't think I can really answer this question. I have no idea how to construct a poll. What I do, I mean, I could. This is not the answer. This is not the question they wanted. But I mean, what I do anecdotally is I do try to poll people I know, and try to get a sense of how they're gonna vote. That's completely anecdotal, but I do have certain people I know who I consider to be informative, because they don't just always vote the same, Democrat, or always vote Republican. They have bounced back and forth over the years. They voted for Obama, then they went to Sanders, but then when Sanders lost, they went to Trump. And so those couple of people to me have been really informative in terms of things that I would have never considered, the Sanders-Trump connection, for example. That's completely anecdotal, but those are exactly the things that I think pollsters are trying to capture at a much larger scale. But I have no idea how to actually construct a poll,
right,
to capture that information.
Let's go. I see a couple other questions on the way in here, but before we get to them, to back up a little bit, I mentioned at the top that you've done some research specifically on relative performance, forecasting performance of predicted versus 538 in the last couple of cycles. Can you give us just the very high level review for those who aren't familiar of what that has shown in terms of, from the metrics you use, which group, Silver and his team of 538 or predicted traders on the whole have done better at forecasting, not just presidential, but House and Senate races?
Well, I only did this once, which was 2018. It was a midterm year, so it was House and Senate. And to date, in that year, it wasn't conclusive, because one of the let's see, I don't remember exactly which side it was, but predicted was better on the Senate side, I believe, and 538 was better on the House side. So it was in terms of the houses of Congress, and in terms of houses of Congress, if you just break it down that way, it wasn't conclusive. And so we'll see what happens this year. And that's one of the tough things, is that we're not getting a whole lot of data in terms of who's better than who, because the election only comes around, a big election comes around every 2 years. The biggest ones are every 4 years. And the tendency is that everything's correlated within a given cycle. So if Biden wins today, it's likely that the Democrats also do better in the House and Senate, and his models are also pro-Democrat in the sense that they're giving the Democrats better chance to do all those things than the markets. And so he's going to most likely win all of those. It's not guaranteed, because if something is on the margin, it's possible he loses some and wins the other, and it can be a wash, but we'll see. On the other hand, if Trump wins and Republicans have a better year than it's expected, then 538 is going to do pretty bad. So it's still not that much information in the sense that everything's correlated. But the reason why this is important, I believe it's important, and the reason I started doing it, is that at least it's a concrete metric, well defined in advance, as to how good were these forecasts, how good were these predictions. Because what I think is really not so good, and I think happens all the time, it's not very good. It's misleading. It causes more confusion than anything else is that no matter what happens tomorrow, Trump, Biden, as we will hear, if it were to, if it's Biden, it's just, well, we gave him 90%, he won, let's move on. And to some extent, there's really nothing you can argue against that. Of course, you don't know that it doesn't mean the 90% number was a good number, but it was definitely pointing in the direction that it needed to. If Trump wins, 538 can always say, as Silver said, I think on Sunday night on ABC or whenever he was on there, that 10% events happen all the time, and that's certainly true as well. So, but this is where the after the fact quarterbacking of who got it right, who got it wrong, I think is always something that leaves the forecasters who didn't give a firm prediction a lot of wiggle room. And that was something I was trying to avoid, because I wanted to say, well, I wanted to pit kind of two what should be formidable opponents against each other. The markets have every reason to be good at this. We don't know if they are, and so we want the markets to be informative, and so we want to see if they are. Can they beat the best, or who is proclaimed to be or acclaimed to be the best election forecaster in 538, and see who's better at that. And that's not something that, to my knowledge, has ever been done before in this regard, because the metrics that have been used before are either very easy to be gamed, or they don't actually capture what we really want, which is we want something that is kind of a definitive, concrete measure of who has more information. Is it the markets, or is it these statistical models?
Yeah. And that's such a good point too, because as you've highlighted a couple of times too, these are such rare events every 2 years, or for the presidential every 4 years. So it's kind of easy to say, yeah, we whiffed in 2016, but we had it at 20, whatever they had, whatever 538 had Clinton at 25, Trump at 25%, something like that. So they can say, sure, 25% chance things happen all the time, or 1/4 of the time anyway. And they were higher than most, if not all, the others. So they were sort of closer to the right answer, even though they got it wrong. So in one sense, they can sort of be right no matter what happens if they have the least confident guess on the side that everyone's already on. They can say, well, we were on that side if it pans out. And if not, they can say, well, we gave the best chance to the thing that wound up happening, to the upset happening, even though we didn't call the upset. To some extent, that's sort of the position that PredictIt traders are in now, or that all the markets are in now, and that they're still showing Biden, but a much narrower Biden win and much greater chance of a Trump upset. So even though there's not one puppet master that's deciding to position it that way, at PredictIt to say, let's have the least confident declaration that the overwhelming crowd favorite agrees with, but that, for better or for worse, that's sort of the position that PredictIt is in this case. And yet, and this is why I think viewers will want to pay such close attention to your research after the dust settles, is that unlike in 2018, when it was basically inconclusive, or depending on the metrics of which races you look at, maybe 538 is a little better here, PredictIt's a little better there, they were relatively similar. And that's part of the reason. Here, they're so far apart that one way or another, your research is going to show us in pretty black and white characterization who was better, because it's not just one binary outcome we're going to get tonight. We're going to get who wins, or we're not going to get any of these tonight, but we're going to get eventually who wins the presidency, who wins each of the 50 state presidential contests. What unpredicted, there are several margin of victory markets for key swing states. We have an electoral vote, overall nationwide margin of victory, and nationwide popular vote margin. So there's a lot of granularity there that we can say, okay, sure, Biden won, and the economists said 96%, and PredictIt said only 60%, and Silver said 90%. Therefore, PredictIt was the worst at predicting that binary outcome. But if we see a much closer race than the forecasters are suggesting, and Biden wins, say, 290, 300 electoral votes, then when you look down at that more granular level, you might see within those 50 state races, or this 6, 7, 8 competitive battleground states, that PredictIt traders called more of those difficult to call, sort of edge of the coin races better. So
that's the thing to look at. That's the thing to look at, and that's the thing that you have to kind of take. You have to take some of this stuff especially with respect to predict it with a grain of salt, because of the high fees, high commissions, and the other inefficiencies in the market, the limits on traders, the limit on the limit on the number of limit on number of traders in the market, limit on the amount that you can buy in any given contract, because the 538 in some sense starts out with an advantage in my analysis with the very high probability events. Right now, California is trading 94 cents for Biden. That's obviously that's obviously too low. But predict it doesn't have enough kind of juice to correct for that, because there's a 5% fee just to put money onto the site essentially, and then there's a 10% winner's commission. So, and there's opportunity costs that having to do with buying those contracts. So there's a lot of inefficiencies, long shot biases on the extremes. So I would want to look at it on those battleground states. It could very well be the case that Biden wins as both predicted and 538 is predicting or forecasting, but that it's closer in terms of whether 538 would have made money to beat the markets, because it could be that one, two, or three of the swing states actually go to Trump, but Biden has enough to get them over the top, and so they would lose some of the states. They would lose some of those states and win the others. The other thing about the prediction market, it's true that the market doesn't represent any one person. So if it turns out that, say, Biden wins Florida and it's right now 60 cents for Trump, there's no way, just like with the other things we said, that you can say that one is right and one is wrong. But one thing that I think is compelling about this, and this is supposed to be the promise of these markets, and the hope is that they can live up to that promise to some extent, which is that the individual traders themselves, they can still say they're right. I can place a bet, lose the bet, and say that was a great bet, and it may have been, but I just lost this one. But I still have to actually suffer that loss. And so the fact that there is a loss involved, there is gain and loss involved, should serve as an incentive, I would think. Although, as people have discussed, there are maybe some perverse incentives that come into play when it's politics, because people's emotions get involved, and certain types of emotional hedging could be happening here.
Yeah, and you certainly see certain emotional biases and traders' psychological biases manifest themselves in all financial markets and all trading, but certainly in an arena like politics, where the outcomes themselves are so not only emotionally fraught, but in a lot of cases sort of identity defining for the traders. It can obviously be hard for even the most good faith, seemingly dispassionate trader to fully divorce themselves from those preconceptions and those biases. I want to go to another question that we have in the chat here, and this is in regard to a 2018 outcome in, I believe it's Texas 23rd District, William Hyrd's district, a heavy Hispanic population district. And I can't on the fly, independently verify this, but the questioner Alvaro is saying that the New York Times Siena poll had a significant pro-Hurd, pro-Republican bias in their polling compared to the actual outcome. So his question is basically, what makes you think, or I guess, do you think that there is not a sort of an opposite potential systemic bias, particularly in some of these key swing states, Florida, Texas, Arizona, that might be, overstating, oversampling, or overweighting Republican support? Do you have any sense in terms of if there is systematic error, whether it's to do with Hispanic populations or any other demographic, of whether it would tend to point in one direction or the other? Do you look back at 2016 and 2018 and say, yeah, more often in recent cycles, there's been a pro-democratic bias, so we would tend to see it that way? Or does your research point you in one direction or another to say it's more likely to be pro-D, pro-R, or just it simply could be there, so it's an unmodeled uncertainty?
No, I don't have any. I don't think that the data is enough to tell anyway, because you'd be looking in 2 to 4 year cycles, and times change, and there may have been Republican biases in the past and Democratic biases, Democratic biases before that. I don't think that there's enough data to draw any definitive conclusions on that in that regard. It's certainly possible, just like it's possible that there's a bias that against Trump in the polls, meaning that he's likely to get more votes than are in the polls. It's possible that there's a Biden bias and that he's going to win by 15 points instead of 8. The only thing that suggests to me that that's not the case is that, I mean, it's kind of, I wouldn't say common sense, because I think a lot of people do think that Biden will win by a large margin and think he should win by a large margin. But given that it seems to be that the country is relatively divided 50-50 or so, Trump won last time, so he did get enough votes to win. It would suggest that such a huge fraction of the people voting moved away from Trump in the past 4 years. So I just think it's more likely to be, if there is an error, in the other direction. But yeah, of course it's possible that in specific, of course, who cares what the overall general election says in these specific swing states? Absolutely could be the case that, I mean, I had somebody asking me about Texas, for example, and I don't know the answer to this, but that the Texas polls are saying that Trump's going to win, although they really are tighter than usual this year. And in a place like Texas, couldn't there be a effect of this silent Biden voter, just like there was the so-called silent Trump?
Right, sure.
And it seems plausible to me, for sure.
Yeah, well, and maybe especially in a state where you have rapidly shifting demographics, and maybe the weighting and other, behind the scenes methodology of the polling, if they're too slow to catch up to that, maybe they would fail to capture it, in the other direction. I want to go. I see we're getting close to 6 o'clock here. I want to do a quick revisiting here for those watching live and not on the replay of the odds. I think it should be coming up for you here. Do you see the main predicted screen there again? I'll just refresh to make sure we got the latest and greatest, but it looks like it's holding relatively still here the last couple hours. Again, we've got Biden 68, Trump 41, which of course people familiar with PredictIt will recognize as the familiar well over 100% aggregate overpricing. It tends to sort of fluctuate between 100 and 110, but you normalize those, you get still something close to a 2-to-1 favorite for Biden nationally, and basically the same picture here too. I mean, in several must-win states, including Florida at 60 cents, Georgia 58 cents, Texas 72 cents, Ohio 75 cents, and Iowa 75 cents. So PredictIt seems, with the possible exception of Georgia and Florida, that those are relatively safe in Trump's corner, but certainly not certain. The other two that have flipped back and forth quite a bit over the course of today have been Arizona and North Carolina, currently both in Biden's column, 57 cents in North Carolina for Biden and 64 cents in Arizona. Arizona seems to be slipping a little further and further away from Trump compared to what it was. It was actually even or flipping back and forth for most of the day through kind of early afternoon. But he needs to, or at least his kind of simplest path, Trump's would be all these red states plus North Carolina and Arizona. But that doesn't quite get him there. That gets him to, I think, within 9 or 10. So he then needs, of course, either Pennsylvania easily gets him there, Michigan gets him there, Wisconsin gets him to the dreaded 269 to 269 tie. So, even looking at this map and the state by state odds, it still shows PredictIt traders expect Trump has some work to do. He's still got to kind of draw the inside straight here. He has a few different paths. There's not any one here that would be deadly were he not to get it. Although if he loses something like North Carolina, it's probably unlikely he picks up the multiple of these others that he needs to make up for it. But he just does still have a little bit of flexibility of pathways here. And that seems to be roughly reflected in this relatively stable national picture here of, again, 68-41, but normalized something more like, high 60s to low, well, maybe mid 60s to mid 30s, something like that, if you normalize them to 100. So, going into, we're now 5 minutes from the first poll closings, although we get much more in the hour or so thereafter. And of course, we have had some interesting real-time Florida data coming out. I'm actually going to switch over to that one. Some of you may have seen this. This is from Twitter user UMishVoter 99. I'm gonna pull it up here on screen so you guys can follow him if you don't already. Yeah, UMishVoter 99. He's put together this spreadsheet that has tracked the early vote, the vote by mail, and the election day voting by party registration. So of course, this isn't showing votes counted for a particular candidate, but this is turnout, actual ballots cast through all methods broken down by party registration, and NPA being no party affiliation. So those are people with the so-called independents. And effectively, I don't know if you have my cursor coming through the live stream, but this is showing now. And so for context, going into the day, Republicans were down about 105,000 votes from the relatively Democrat-heavy early voting and vote by mail. They've wiped that out and now have a plus nearly 200,000, 192,000 vote advantage at this point. So they've gained about 300,000 votes just going by party registration. Of course, you can have Republicans crossing over to vote for Democrats, possibly even some in the other direction, but presumably more so ours going for D. And down here at the bottom here in this blue cell, you have the D minus R advantage on the voters yet to vote. And that shows of those that haven't voted by any means yet, you've got a Democrat advantage of 326,000. So that number has crept up throughout the day as the election day voting has been predominantly much more red than blue. As this number, the 191,000 advantage for Republicans, has continued to grow. So, but the question is, there's some magic number, which is the cushion that Republicans have to have, this 191, which has been continuing to grow throughout the day. By the time polls close, that has to hit some certain magic number that we can't know yet in order to survive whatever the net crossover vote is, the Republicans breaking for Biden minus the Democrats breaking for Trump, and then whatever net deficit the Republicans may have among those NPA unaffiliated voters. So might be 200,000, might be 250,000. That magic number they might be already over it. So it's hard to know. They might wind up with something relatively comfortable. So in this case, might be only 2.5%, something like that. But this is something interesting to keep an eye on. The link, this horribly long Google spreadsheet link, you can find on that UMich Voter 99 Twitter page. So I encourage people to watch that over the next couple hours as the rest of the Florida vote count is going to be faster than almost all the other states because they've been processing it and they're so good at processing this early and vote by mail return. So this will be a really interesting bellwether to see not only who wins this critical state, but it might show us, okay, was the polling error off by 1.2 points, no points, 5 points? And if you can extrapolate that a little bit, despite the fact that Florida is very different demographically and unique, definitely would not translate, for instance, to the Rust Belt, but might give a little bit more of a hint in terms of how some of those other sort of true toss-up states are going to go.
If you could go back to the predicted map, I just want to say a couple things about this. Which
that's the Senate map. Let's see. There we go.
First thing is that the Biden-Trump breakdown 68-41. That market got saturated at 5,000 traders quite a while back, several weeks ago. So. I mean, I don't know how much that's affecting the movement, but I definitely have seen that so I would think that if the movement, and Trump has been more or less, I think, around that 41-cent number for quite a while, even though states like Florida, North Carolina, Arizona have kind of flipped back and forth here and there over the past couple of weeks. So my sense there is that that's not maybe a very good guide. That's at least my sense in terms of how active the traders are. Of course, being election night, it very well could be more active because people are actively trading.
Right.
The other thing I should say that I noticed in the past couple of days, and not to say that this indicates who's going to win, but it does indicate where kind of the market or the participants in the market are thinking, and this is something that is related to an idea in sports betting that's called closing line value, which is often if I were to bet on a team at plus 150 to win a game, and then the closing line just before the game starts is plus 120, well, I got better odds than the closing line, and the closing line is the most efficient, incorporating the most up-to-date, efficient information prior to the game starting, and that tends to be an indicator of who really is likely to win the game just before the game has started. So what I did notice, and again, all of this goes out the window if the theory of irrational market participants holds. But if that's not the case, so over the past couple of days, Pennsylvania, North Carolina, and Arizona, prior to today, were moving to Trump. And so to some extent, that indicates that there was movement in Trump's direction. So that the market was suggesting that Trump was relatively underpriced before election day. Now we're sitting here on election day, and those anything that happens today or after the fact is obviously in response to whatever indicators are coming through on election day, whether it's exit polls or any kind of returns that come in. I would say that I know less about exit polls than almost anything else, but I think that they do tend to be they can be unreliable at times. But I would expect that that's another case where this year these types of returns and the numbers that you were just pointing to in Michigan are laden with uncertainty as a result of the difference of how the voting is being conducted in all these states with the mail-in and all of that. So in a given year, whatever the magic number might be, well, that kind of goes out the window because we don't really know who voted early and who didn't vote early. I mean, I know in New Jersey, we don't even have, at least as far as I know, we don't have early voting or mail-in voting. But this year, everybody in the state got a ballot show up in their mailbox, whether they asked for it or not.
Right.
So that definitely changes voters' behavior.
Yeah, and the obviously different effects to the in that regard, state by state, and that's why this test case with trying to model this information the spreadsheet was just showing is uniquely. Well, we'll see if it's useful, but uniquely robust in Florida just because of the extent to which they do publish that data on kind of a rolling basis. And just to clarify, that was Florida data rather than Michigan. The Twitter user putting it out is UMich voter, University of Michigan voter 99. So it would seem like he's focusing on Michigan, but that spreadsheet he put together is actually on the Florida overall turnout. So again, it's one that people may want to keep an eye on in the next couple of hours if they want to potentially get a bit of a jump on how some of these other swing state markets and the national markets are going. And just to get back to your other point there, Harry, it's a very good one. I'm glad you brought it up about the 5,000 trader cap. So we talked a little bit about the $850 position limit in any given contract. I'm predicting you can't put more than $850 at risk. The other limitation is that, and this is just the one imposed by the regulators, is that in no contract within a market can more than 5,000 traders have an open position. And so, prior to election day, one or maybe two markets had hit that, just the really biggest headline markets. As of today, Predictit tweeted out a list of the markets that had hit it, and it had grown quite long. Several of the sort of proxy markets for the presidential outcome, which party will win, which person will win, will the VP, the VP elect be a man or a woman? So these all are kind of proxies for the same outcome. Does Biden win or does Trump win? So I think now most of those proxy markets have also hit, and most of these most popular, sort of most heavily traded swing state markets have also hit that 5,000 trader limit. And it is something we definitely did see back in 2016 when I was still doing work for Predictit and kind of in the war room on election night. We definitely did see, and this is nothing non-public, you can see this just if you're paying close attention to the public facing site, that the pricing in these, at that point, there were four nearly perfect proxy markets for each other. What person will win, what party will win, who will be elected VP, and what will the gender of the president-elect be. They were all perfect proxies for Trump versus Clinton. And the first one to have hit that 5,000 trader limit some weeks before, despite being the more natural sort of headline market, I think is the name of the person that wins the presidency, was the slowest to respond to the data as it emerged on election night. And the one that responded fastest, was effectively the most liquid, most responsive, most rational market, was the most recently added one, even though it was sort of less of a headline grabbing title. I think that one was who will be elected vice president. So it seemed like kind of an undercard, but that was sort of the best bellwether to watch for lightning fast reactions to new data. So it was an interesting sort of side commentary on the way that some of these artificial limitations can constrain the efficiency and the speed with which these markets digest new data. So to your point, I think we likely will see some of that impacting the speed with which some of these markets react differentially from others. So that's worth keeping an eye on. I believe if you're looking on the Predictit site that there's an addendum added to the rules where you can determine, I'm going to bring up one here, Let's see.
Yeah, they tell you.
Yeah, right here. It says at the bottom, as of this time. And so this one back on October 19th, a couple of weeks back, who will win the 2020 election. That one hit the limit of 5,000 traders back then. So that's been more saturated with now somewhat staler positions than some of the others. So indeed, if 2016 was the guide, we may expect to see that one move a little bit more slowly than some of the others. But it requires keeping a lot of tabs open if you want to kind of follow along with all this stuff. But you don't necessarily need to be inclined to put your own money at risk to get a lot of information value out of this site, sites like these, and the many different markets traded thereon. Just the very fact that that the traders are putting their own money at risk. Again, as we've been discussing, too soon to tell how much incremental information value that throws off. The premise, the thesis, the hope is that it does throw off some unique information value. Again, they're so far apart from the modelers, the quant forecasters this year, that I think we'll have a much better answer, if not tomorrow, then in coming weeks. And certainly once we're able to avail ourselves of Harry's updated research on this to get some kind of a real, quantitative grasp of how do markets do in terms of forecasting uncertainty, particularly the most hard to forecast races. And, beyond that, just one being better than the other, it could be, why does one do better in one kind of a race than others? To what extent do whatever biases are there in the markets or whatever blindness may be there in the modelers affect certain kinds of races more than others, whether it's incumbency or the long shots versus the toss-ups, or the Senate versus the House. I think watching your research this year, Harry, is going to be absolutely fascinating to anyone, whether they're simply a political enthusiast, hobbyist, a professional, or kind of retail trader of these markets, or just a consumer of polling data and a follower of the this wonderful political theater we have here in 2020. So I look forward to watching that as that emerges. And can you just remind folks, or give them for the first time, for those who didn't catch it at the beginning, all your different coordinates for your work at Rutgers and at researchers.one?
Yeah, well, the easiest way to get a hold of me would be on Twitter, Harry D. Crane on Twitter, and I've been talking about the election on there, and post to my work, which is available on Researchers One and on my website. And I'll be talking about that over the next couple of weeks as well. I was curious to ask you, although maybe if we're out of time, let me know. But I was curious. Another thing I was going to say about the predicted map in particular was, I'm curious about the we've seen some active trading now with respect to Arizona and North Carolina, and we've seen, and I guess a little bit of Pennsylvania, it seems. So there is some kind of information being processed, I guess, or there's some active trading going on and moving away from Trump. I assume that that's in response to information coming in from whether it's the exit polls or the early returns or whatever it is.
Yeah, I would think, and I'm not sure. I think Pennsylvania is one that famously is not going to give us much, if any, good data tonight. Even if things were operating smoothly, and at least anecdotally, it seems like not everything is operating smoothly. But I think that's one of the ones we're going to have to wait longer on to get good data. So my guess is that these are moving, and as you say, they are. At least those three: Pennsylvania, North Carolina, and Arizona, have all moved away from Trump, further away from Trump, since kind of midday. Pennsylvania is now at 70 cents, Arizona 61, and North Carolina 52, all in the Biden column. Although that 52 is a little bit misleading in North Carolina, because again, with the aggregate overpricing, you've got, pulling it up now, but frequently you'll see both candidates tied at 52. So they've got to color it. It's actually now it's moved one tick further. So they got 53 for Biden and 50 for Trump. So still somewhat close to a toss up.
That came down. It was a 58 for Biden a few minutes ago.
North Carolina was okay.
Yeah, so I guess that's why I bring this up, in the sense that, like I said, what I was saying earlier is that there's a lot of, I presume, traders who are pretty well attuned to how this data comes in and what it means for projecting the outcome of the fine tuning that likely outcome. And I guess I'm just kind of I'm curious how that actually, how much any of the knowledge or any of the kind of the expertise based on doing this in prior years, how much of that actually does carry over into this year, given the circumstances that are going on in any given state. I think that I guess it's a question as to how much we should read into these
Right.
movements in real time, because
Yeah.
usually they're pretty informative about something. But I
Right.
wonder.
Hard to know. To read the mind of the market, especially as right now it's basically a lot of tea leaves. People are reporting on what the lines are like in Democratic strongholds or Republican strongholds. Again, I think the best real data we're getting is out of Florida. You still have to model it and make some assumptions about exactly what it means. But early on, that seemed to be convincing people that Trump's prospects overall were going to be better. And a lot of the swing states started moving towards him. That's pulled back a little bit. Predicting still has Trump favored in Florida, but by less. He was ahead by 30 percentage points in the pricing, not in the vote share earlier. And he's now ahead by just 13. So that's pulled back quite a way. So the Biden's improvement in the other sort of the Trump reach states in the battleground may simply be due to the somewhat softening of what looked like a little bit more of a Trump move in Florida. It also may just be, with the election being today and a lot of the polls closing, a few just closed and more closed in less than an hour and an hour after that. You may also just have an effect of the time horizon now rapidly collapsing, right? So you've got an opportunity cost unpredicted. Even if your big trader's got 10, 20,000 to throw around and that $850 limit, you may still be somewhat selective about which ones you want to play. You may be reserving your big bets for ones where you think you might be able to get, 50, even 100% return over the course of the day. And that, the risk associated with each of these bets may be sufficient that you need that kind of an expected return to justify it. So if you're looking at, Pennsylvania at 60 this morning, and you think Biden's going to win Pennsylvania, but 60, yeah, sure, that's a 67% return if you invest 60 and get back 100. But risk adjusted, you may feel there are better bets on the board, or at least you want to keep more dry powder over the course of the day. If you're getting now to 6:15 p.m. on election day, rather than having the whole day to play with, you're now talking maybe this uncertainty might collapse in an hour and a half, or even less. So maybe that risk profile changes over the course of just an afternoon. So I don't know to what extent that's part of it too, but I could see that changing too. Just the average risk profile of a large trader changing, where opportunities that they would not have seized on just given the opportunity cost of more attractive opportunities become relatively interesting when it's something that they can convert on possibly, inside of an hour.
Well, one thing that I guess I did just notice that that Texas is moving down away from Trump, 6 cents down as well. So I guess overall the markets are moving in that direction.
Mm-hmm.
At this time. Actually, I just saw and I guess I mentioned Mayweather McGregor earlier. I'm following a sports bettor on Twitter, Rufus Peabody, well-known sports bettor, who just wrote, this is one of those lifetime, once in a blue moon betting events like Mayweather McGregor, that he's comparing the bet on Biden to be like a bet on Mayweather, like almost a sure thing, and the markets are really getting it wrong. So that's definitely seems to be the opinion of a lot of this, if we can call it so-called, if we can call it smart money, mm-hmm. Definitely that is the opinion.
I would say overwhelmingly so. And it's anecdotal, but it's based on a lot of anecdotes, conversations with a lot of other traders, the well-known traders, that they think the pricing is nuts. So it's sort of interesting that when we talk with the predicted traders on the whole, the mind of the market in aggregate says Trump has a much, much better chance than even the most Trump bullish forecasters. But yet, if you pick out any number of well-respected, very successful predicted traders, I think 9 out of 10 of them are going to tell you exactly the same thing that the sports bettor you're referring to will tell you, that no, this is just a gold mine. You're never going to get an opportunity again like this to buy Biden the night of the election for less than 70 cents and make nearly 50% on return on your money on something that they see at least as being very nearly a lock. And if it is indeed very nearly a lock, if the mind of the market has it wrong, then that's the right viewpoint. This is a super short term, very high probability, high return, and one that you can not only make once on that, the Biden top line bet, but you look across the complex of markets and you can buy you can short every bracket that has a GOP edge in the electoral vote margin or the popular vote margin. So there are, dozens of different vehicles you can invest in here. If you're really certain of that outcome, if you're certain that the market has it wrong here, you can really clean up in the next few hours, but you've got to make sure you really are that certain.
Well, I really think from the standpoint of a bettor, a professional bettor, or even a semi-professional bettor, that the attitude is pretty. This is a no-brainer, because you become very accustomed, to going with the numbers, and the numbers here. The numbers could be off in this particular case. The polls could be wrong, but you don't. If you make this bet, the logic is the rationale is pretty straightforward. The polls will be systematically off every once in a while. The data coming in on a sporting event will lead you to bet on something that's kind of messed up based on what's actually happening every once in a while. But on the whole, if you do this over and over and over again, you have these numbers, and you were able to place this bet over and over and over again with these poll results, it's going to make you money big time over in the long run. And so that's the thinking that's coming into elections, which is certainly a reasonable thinking. And if you're betting on an election, what's the difference between betting on an election and betting on a football game? The question, though, and I think that's what makes this interesting to me also as a statistician, is that the question is, how much does the statistical logic and the rationale carry into once in every 4-year presidential elections, where you don't have the tons of data, the tons of replications to train a model and to account for all of the kind of subtleties, and not to mention there's just a lot of unknowns that happen in a given 4-year period, changing demographics and so on, that aren't in the data. So I think it does present a much harder statistical problem, because there's so much information that's non-statistical or not quantitative.
Right. That's as good a place as any to leave it. Let's all follow Harry at Harry D. Crane. Is that right on Twitter?
Yeah, that's right.
And we'll be eagerly anticipating your research on this election cycle coming out shortly. Everyone, good luck tonight. Check out predictit.org. If you want to follow us, we are at Old Bull TV on Twitter. Oldbull.tv is where our YouTube channel is based. We have various shows and podcasts for you to follow and enjoy. Good luck to everyone. Drop us a line with any questions, and we'll chat with you again soon. Harry, thanks so much for joining us.